Ladies and gentlemen, good evening. This is Christopher Aaron. It is the 20th of July, 2016. We look at gold and silver in this series of videos from the most unemotional standpoint that we possibly can, which is the charts. There is a lot going on in the world. Fundamentally, as we know, central banks are all printing money like crazy. Deutsche Bank is asking for a bailout of a few $100 billion, only 8 years after the United States banks needed to be bailed out. They are printing money. There are terrorist attacks going on in France, shootings here in the United States of multiple police officers. It is a crazy time to be alive. And so one of the things that charts can do, if you're not familiar with them, is to try to see through the extreme emotion. And it's not that the emotion is unimportant. It's just that there's also a benefit to looking at what the sum of people think. And when we're looking at the price, we are looking at the sum. We are looking at what does the majority of people, the sum of people in the world, think gold is worth at this moment in time. 2016, spinning around on this rock in outer space. What is this metal worth in fiat dollars? Right now, the sum opinion is 1310. This could change. Now, if you believe that the sum opinion is wrong, that is where the opportunity to profit comes in. If you believe the sum is wrong, you buy the thing at the price, in this case gold, and you sell it when the price is correct, which could be in the future, 5 to 10 years in the future. But I just think it's important to understand what we're looking at here when we're looking at these squiggly lines. It's the sum of all individuals on the earth, including manipulators, including speculators, of which I am one, including stackers, of which I am one, and many people are out there. So we're looking at the sum of that on a little point. Right now, gold at 1310. Let's put this into perspective on the 18-month time frame. Now, this is a very important resistance zone here that was broken that is now being retested. And if you've been following this for a long time, you'll notice that I moved the green band up. We used to have this at 1185 to 1205 or so. We've moved that up. Why? Because this resistance level here from early 2015, tested again in March of 2016, tested again in May, tested again and failed in June, was decisively broken in late June. And when a market goes 1, 2, 3, 4, and on the fifth attempt finally breaks through a level, it means the sum of the buyers finally said enough is enough. This metal is worth more than you guys are selling it for at this level. So the price spiked higher, and now we're coming back into this level. And so one of the things that is important to pay attention to if you're interested in this type of technical analysis is, when does a market come back to a previous resistance level? Of course, it's never an exact point. Just like points don't exist in space, they're infinitely small. We're often talking about a band here, a range of prices where we expect buyers to come in. So it's possible that low has already been put in. If this low was put in today, slightly above this band, that will be a very bullish signal. It'll mean over the next few weeks we should expect a modest rise, a consolidation or so in gold, a continuation of this uptrend shown in the royal blue color. Now we will flip over to gold's cousin, silver. and we see the decline here. Now, this is a moment that I will mention that I have launched the Power Trader service that people had been asking information for, asking about. That has been launched now. If you're interested, you can check that out on the main website. We are in a silver trade right now. I'm going to show a little bit of the background, the setup for what I see developing in silver, even as it was weaker today by some 60 cents. This is my trading screen. This is the software that I use to plot the short-term prices in silver and in gold. This is different than the charts that I usually show, where we're looking at more long-term perspective. So here we're looking at just the last 3 days again in silver, and you'll notice this pattern that's forming. This is why I think silver is approaching a bottom today or tomorrow, along with gold. This is a bottoming wedge pattern similar to what we saw in the early part of this year when we were watching for the final low in silver below $14 an ounce. This is that same pattern that is showing up on the hour-to-hour time frame now. So this shows me that there's a possibility, a strong possibility, of a bottom being put in here. Now, if anyone ever tells you that technical analysis is 100%, that's a time to raise your BS flag, as we could call it, because nothing is 100%, no form of analysis is, but certain forms of analysis are more accurate than others. I would say this type of pattern, as I've observed here, tends to signify a bottom about 2/3 of the time, a local bottom, about 2/3 of the time. And so if that is a bottom right there, we're backing out now to the 6-month time frame on my trading chart. If that is a bottom in the low 19s, what it means is that this entire back and forth here is basically a large consolidation. You could call this a pennant pattern. Basically, it's a consolidation. And these consolidations in bull markets tend to resolve to the upside most of the time. Now, as you know, over the last few weeks, I've been saying that silver, at some point in the next few months, needs to come back and retest this 18 to 1875 level. I still believe that will happen. This type of a short-term trade is more to say what's going to happen over the next couple of weeks. And is this a good risk to reward to try to make a profit on perhaps a short-term spike before we maybe see a retest of this level here shown in green that we have been looking at? And I think that's really important if anyone is considering trading these markets in addition to investing in these markets. It's very important. In fact, it's really critical to segregate in your minds and in your actual accounts, to segregate between your trading capital and then your long-term investing capital and your long-term stacking capital. You don't want to mix those up, because we're looking at the same markets, but these strategies are very different. And as we've seen, these leverage trades, when they're right, can result in 150% gain or so with about $1 move in the price of silver. And when they're wrong, they can result in about a 30 to 40% loss. So those tend to be risk to reward ratios that I like to take over and over again. If we can have a gain like that and then a modest loss, that's going to work in our favor over the long run. But again, just to come back to that point, it's very important that you segregate if you are trading and stacking at the same time, which is what I do, segregate those two components and treat them as separate endeavors. The executive summary, we're looking at gold between 1285 and 1306. Still a long-term downtrend line from last video being tested. 1915 or so, the wedge on silver. Is this going to hold with gold? If gold bottoms here, is silver going to hold somewhere above this 1915 region? If not, we're looking at the 17 to 18 region for support, with the next spike high coming in between 2150 and 23. All small moves within the context of a unfolding larger bull market. I thank you very much for being with me. Have a lovely evening. I will be back this time next week.